An 8 billion parameter free model running on a laptop just out-traded Claude Opus 4.7, the most expensive frontier model on the planet. On a $50,000 bankroll, the cheap one made $390 in a single trading day. The premium one lost $634. Same prompt, same 6.5 hours. Here's what happened. Here's the setup. 5 AI models, $500 of paper money each. 1 trading session. Tuesday, May the 5th, 2026. Market open to market close. Every model got the exact same prompt. No live data, no news headlines, no sector context. Just whatever each model carries inside its weights. Real prices pulled at the 9:30 open and 4 p.m. close through Y Finance. No human intervention. The 5 contenders. Claude Opus 4.7 from Anthropic. The current premium flagship, around $15 per million input tokens. GPT 5.5 from OpenAI, the most widely deployed commercial model on the planet. Gemini 2.5 Flash from Google. Production grade, paid API, fast. Llama 3.370 billion. Open weights, running on Groq's free tier. And DeepSeek R1 8 billion. Also open, running locally on my own server through Llama. 0 API cost, 0 cloud dependency. The premise of this video is straightforward. If you are paying for the most expensive frontier model, you should expect it to think better about money than a model that runs free on a laptop. That is the whole pitch of premium tiers. Today we got to test it. The result is not what I expected, and it is not what the marketing pages would tell you. Every model saw this prompt word for word. You are a stock trader with $500 to allocate today. Pick exactly 3 publicly traded U.S. stocks listed on the NYSE or NASDAQ. Allocate the $500 across those 3, must sum to exactly $500. For each, ticker, dollar amount, 1-sentence rationale. No clarifying questions, no hedging, make your picks, that is it. No real-time data, no news, no earnings calendar. The point was to test internalized market logic, the patterns each model has absorbed from its training data, not who has better tool use or live retrieval. This is a thinking test, not a research test. With live data feeds, the experiment becomes who has better APIs. Without them, it becomes who actually understands what they are looking at. Claude Opus 4.7 went heavy on AI infrastructure and consumer staples. NVDA at $200, Walmart at $175, Palantir at $125. 40% on the AI trade, 35% on a defensive consumer name, and 25% on a high beta software bet. The portfolio reads like someone who memorized every quarterly earnings call from the last 3 years. Considered, diversified, articulate rationales, robust data center capex from hyperscalers heading into earnings season. That is a real Anthropic sentence right there. GPT 5.5 took an even heavier swing on NVDA, 220 out of 500, then Amazon at 160 and JP Morgan at 120. Almost half the bankroll on a single AI semiconductor name. OpenAI's flagship is the most confident AI bull in the room. The logic is fine. NVDA up means everything else is gravy. NVDA down, and we will get to that, means the rest of the portfolio cannot save it. Gemini 2.5. Flash went NVDA at 200, Eli Lilly at 180, Amazon at 120. Same NVDA conviction as Claude, but Gemini swapped the defensive slot for a healthcare growth name. LLY is up over 100% in the last 12 months on GLP-1 drugs. That is a momentum bet dressed up as a quality bet. Notable, Llama 3.370 billion took the most boring portfolio in the lineup. Apple at 200, Microsoft at 200, Alphabet at 100. 3 mega-cap tech names with the lowest single-day volatility in the entire S&P. 0 AI semiconductor exposure. 0 hype. The rationale was almost generic. Strong brand, diversified revenue streams, innovative products. Open-source models are usually accused of being unimaginative. Llama did not exactly fight that stereotype. DeepSeek R1 8 billion, local, no internet. 8 billion parameters. Apple at 200, Tesla at 200, Johnson & Johnson at 100. AAPL plus a high volatility EV play plus defensive healthcare. Barbell allocation. From the model with the lowest compute budget by an order of magnitude, we will see if that survives contact with the market. 9:30 a.m. Eastern. Bell rings. All 5 paper portfolios go live at the open price for each ticker. 6.5 hours later, at the 4 p.m. close, we settle. Here's what the market actually did to these picks today. NVDA opened at 199.30, closed at 196.50, down 1.4%. 3 of the 5 models, Claude, GPT, and Gemini, had NVDA as a top conviction. All 3 got hit on the same name at the same time. Apple opened at 276.90, closed at 284.18, up 2.63%. Llama and DeepSeek both held $200 of AAPL. They got the same upside on the same name. Microsoft drifted down 0.95%. Alphabet up 0.54%. Eli Lilly up 1.75%. The only thing keeping Gemini from ranking dead last. Tesla down 1.47%, dragging on DeepSeek. Palantir down 3.13%. A brutal single-day move that single-handedly broke Claude's portfolio. The pattern is clear before we even tally the totals. Conviction on AI semiconductors lost money today. Boring megacap tech made money. Tesla and Palantir punished anyone who reached for high beta exposure. Final ranking after the close. 5th place, Claude Opus 4.7. Final value, $493.66. A loss of $6.34. Down 1.27%. The most expensive model in the lineup came in last because of a single position. Palantir down 3.13% on the day on a $125 allocation. $3.91 lost on PLTR alone, plus another $2.81 on NVDA. The Walmart hedge made 38 cents, not enough. 4th place, GPT 5.5. 496.03. Down 397. 44% of the bankroll on NVDA when NVDA was down 1.4. There's no amount of clever Amazon and JP Morgan exposure that recovers from that. 3rd place. Gemini 2.5 Flash. 499.18. Down 82 cents. Essentially flat. NVDA pulled it down, LLY pulled it back up. Net, basically zero. Of the 3 NVDA conviction models, Gemini was the only one that meaningfully diversified its risk. That choice saved it from ranking with Claude and GPT. 2nd place, DeepSeek R1 8 billion, local, free, 502.39, up 239 on the day. The 8 billion parameter model running on my own hardware just outperformed 2 paid frontier models. Read that sentence again. 1st place, Llama 3.370 billion via Groq, 503.90, up 390. The boring AAPL plus MSFT plus Google portfolio with 0 AI hype exposure won the day. Open weights, free tier inference. Beat everything paid. The takeaway here is not that Llama is better than Claude. One trading day is not enough data to claim that. What this experiment actually shows is something more uncomfortable for the AI hype cycle. The conviction patterns these models reached for. AI infrastructure, high beta software, momentum healthcare. Those are the patterns trained into their weights from years of internet text. Claude and GPT internalized the consensus AI bull thesis the most aggressively because their training corpus is the most saturated with it. That made them the most exposed to a single bad day for that thesis. The 2 models that won today went the other direction. Llama picked the most defensive blue chip basket in the S&P. DeepSeek went barbell, defensive plus high beta. Neither one chased the AI conviction trade. On a day when the AI conviction trade lost money, that is what won. Here is the money use case. If you are running a real portfolio and you are using an AI model to generate ideas or screen positions, and a lot of operators are doing this now, the lesson is not which model to pay for. The lesson is the model is reflecting the training data, not the market. The most expensive model with the highest conviction can still lose you money if its conviction is in a position the market is selling that day. Same allocation logic on a $50,000 bankroll instead of $500. Llama would have made you $390 today. Claude would have lost you $634. Same 6.5 hours. A $10.24 spread on 500. On a single trading day. I am going to keep running this experiment. Same setup, different trading days. If you want to see whether one trading day is signal or noise, subscribe. I post every breakdown the moment the market closes. All the tools used in this video, plus the prompt and the full P&L spreadsheet, are at theoperatora.io. The link is in the description. The picks are made, the market closes, the data does not lie. See you on the next one.